Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 30th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, the usual routine here. Wave 1 is done. Working on wave 2 down. Question is, Ian, is that over and we're ready to go blasting off? Or is this simply going to be another type of retracement and a failure and we continue lower? So we don't have to go any higher. We could reverse from here and go down. That is stuck in this first battle zone, which we tested multiple times over the last multiple years. And then we kind of popped a little higher, went here, and then on the way down, found support several times. So we're in that first cluster of battle zones, and we could stop here and go lower. We could go a little higher and go lower. We could potentially do from the high to the low, a 618 type of retracement, which would put us more up in this area and fail. So it's not a clean chart at the moment saying, yes, we're definitely going higher, that this is over, and you could say that this is the wave 2 complete, and we're definitely going breaking out. Well, I can't say wave 2 is complete, but I can finish the sentence by saying wave 2, once it is complete, we're definitely going breaking out higher. And the plan is once we do go breaking out, we're going to head towards that 130, 140 target. Fair enough? All righty, so let's jump into the charting platform. And we can see, so looking at the dollar index on the charting platform, we can see we reached our targets. Last few weeks, we talked about if we could break the 618, which was right around this area. If we could break that, we were likely going to go run toward the 1448, 1272 extensions. That is what ultimately happened. So from the recent high down to that low, for weeks we were stuck between resistance and support, couldn't really do anything. And we said, well, as long as we break back above the magic fibbo, we break above this 618 level around that 99.5, then we had a 75% chance we'd go visit 101, and 70+% we'd go visit 101.50. And we did both of those, and we're starting to reverse. So is that it? And we've been talking about this. Is this the potential A, B, C, where my A equals C or A equals times 1.272 equals C? And that's basically right where we went to. So this isn't a guarantee that that initial move up is the A wave. This correction down is the B wave. And this move up is the C wave, but it fits at the moment. So if we're able to continue to break down, we don't hold the prior breakout, which is where we tested multiple times. We don't hold that, then we're very much likely going to go visit the magic fibbo in the support zone. And if we don't hold that, we're going lower low. We don't hold the lower low, then we ultimately go lower low here. And one tick below this 95.50 area would mean that that cannot be that wave 2 bottom. So Is that the ABC? Maybe. Our weekly, looking at the software, is an overbought territory. Our daily starting to turn over. We're beginning to see a PAI hook and a trend momentum cross. What does that mean for us when you look at the software? A daily hook and cross with a little slope angle separation equals a 4-hour cycling down. And as you can see, the 4-hour began its process and the trend momentum's made it. PAI didn't quite make it all the way. Look where money flow stopped. So this is a typical area where the daily hook and cross means the 4-hour is going to cycle. And my 4-hour was in the process of doing that as we started grinding lower. But at the moment, we didn't quite finish the cycle because it's not just red and or red and blue. You need red, blue, and green money flow to do it. So this is traditionally when it doesn't quite make it and you see a slingshot up to a slingshot down where it ultimately does finish. And more than likely, this is going to continue to push lower. The logical area for us to continue that push lower is going to go back and test that 100.5 area, which is where we kind of broke out, retested to go to that last little pop. But if you expand the view out, that's that area that we've been struggling with for quite some time. And I'll condense this view here. As you can see, we go back several months, back in the 2025, almost a year ago, actually a year ago, into May, June of last year, we were testing this zone and we refused to break it even on this most recent breakout. That's typically why we want to come back and revisit. Go further back in history, 24, we kind of held support there. Go back in 23, we dipped below but held support there. And then you continue to watch that. And I can only go so far back on this daily, but it's been a major resistance level. Go out on a 3-day. You can see that 101.50 is an area that every time price, even to a weekly, every time price gets in that 150 area, it kind of struggles. So that's why we're watching this very closely. That's this area right there. And you see this goes all the way back to 23, and we've kind of been in this sideways zone. Even though we did pop above, this is the critical zone, this pink box. So the fact that we slightly broke above this, trying to head to where we were before, and you can see we spiked there, and we spiked here before, still didn't break this, but we've been testing it and failing, testing and failing. So is it going to happen again? So this is why I like to look at that bigger picture. So even as we rallied up into 2022, made that top, and that was 4 years ago, we started talking about that, almost 4 years ago, another month or so will be a 4-year period. And we said, hey, this is going to be a big retracement. It's going to take multiple years, and we're expecting probably a 618, maybe a 786 type of retracement from what? That early 2008, 70.74 low, up to that high. We're looking for that wave 2 correction. And typically you get a little bit deeper retracement. So that's why we're thinking maybe a 618, 786 type of retracement. Are we going to finally get that? Still on the table until when? Till we break above this pink box. We get above this pink box up here, then the likelihood we're going to go down to this target and reach a 618, 786 retracement is pretty much off the table. We get above the pink box, then we're off to the races to our 130, 140 target over here. So that's what's clear and concise, that if we do continue this, Emil, we break above that area, then it's game on. I still think it'll probably take a year or so. Could take it more, but at least a year-ish to get up here. So I'm not looking, well, once it breaks 108, 109 level, we're going to rip, 20 points straight to 130, 140 here in a matter of days, weeks, or months. I do think it will take years. Got it? But that's clearly where we're headed. Only question is, are we just rallying to get another push lower to reach that target zone that we originally talked about 4+ years ago when we hit that? Or is that where we headed first before we go up there? Or do we keep grinding to reach up here and ultimately go that way? Well, that's why I always tell you, all roads lead to this target, no question. The only question is this recent low over here? And you can say, I don't see anything. I see nothing but lines. That's by design, right? We use these on every time frame. So let's go back into the current hard right edge, zoom in so you can see all the current price action. And this is what we're discussing right now. Is this recent move just corrective? We've been in a downtrend. We've been making lower highs, lower lows, lower highs, lower lows, as we're grinding down toward potentially that 87 down to 80 zone. And so far, we reached the 95 low. We've been getting lower lows. Remember, months back, we said, nope, I don't think that's the low. We're going to make another low. I don't think that's the low. We're going to make another low. Didn't make it by a lot. And even this, with all this price action, made another low. I'm not convinced that this is that low, right? It's just, it could be, and we're ready to go breaking out. But until price proves otherwise, we still got more downside pressure looming until it's not. When is it not? You get above this pink box, then these lower low targets are off the table, and we're in a potential breakout heading to that 130, 140. Now, is this latest movement that ABC? Could very likely be that that was the A, this was the B, and this is the C, because proportionately it fits. The rule is A typically will equal C, or A times 1.272 extension equals C. And in this example, A would be equal to 1.272 equals C. Got it? Why? Because this rally up, this correction, we rallied to the 1272 area perfectly, and then we started reversing. Well, this is what I said last week. Be careful. The dollar's expected to start a pullback after this run up in reaching the targets. That's typically what happens. And what else typically happens when you reach your extensions? You're typically going to get a pullback, and the first place you're likely to go to would be, well, maybe we bounce off the 1448 and we go higher. But more often, you go back to where you broke out from. And that's right around this 150, where we tested, failed, and I was showing you that went back into 2023. We were way over here finding support in 24, and then other support over here. So this battle zone goes way back when we were finding support. Then we broke below and went lower, resistance, 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 resistance. So for the year plus, we've been finding this as resistance. So yes, we broke above it. That's good. We reached the target. The monthly is still pushing higher, but the weekly's overbought. The daily's overbought, turning down. So looking at the software, this is why we said last week, hey, expect the dollar, now that it reached its targets, is likely going to give us a pullback. So far, so good, right? We're starting to see that bit of a pullback. I don't think the daily cycle is just starting over. The 4 hours not quite finished its cycle. So this is what we're showing you. 4 hour money flow didn't quite reach it. So this is typical when, in order to finish the cycle, this is likely going to go from a slingshot up to a slingshot down. So the bias is this is probably going to continue to push lower, make another new low, push toward that breakout zone of that 150. Everybody good? So I'm not thinking this is ready to go breaking out. Anything is possible, but the probability we continue to go lower when our daily on the software has a PAI hook, trend momentum cross, Got a little slope, beginning to see a little angle in separation. Combine that with a weekly that is overbought territory. It hadn't turned over yet, but that's what we're watching. What happens if we get the weekly to hook and cross? Then that daily is going to cycle all the way down. That's the uniqueness of this software. In advance, it's a market price anticipator. You get a weekly PAI hook and a trend momentum cross. What happens? A daily cycles down. You get a monthly hook and a cross, the weekly cycles down. You get a 4-hour hook and a cross, the 1-hour cycles down. Why is that important? Well, if I'm trading options and I see a weekly's hooking and crossing, then I know the daily is going to cycle down, and it takes a daily about 2 to 5 weeks to cycle. So that means I can't do weekly options. I'd have to go several weeks out. More like monthly options would be better when I'm looking at a daily cycle down. What if I'm just looking at a 4-hour and I'm scalping intraday for ODT option, in the day option? Well, that would be an hourly cycling down, and that would take most of that trading day. So that's how you kind of use this to your advantage if you're trading options. But right now, this is stating that we're likely going to get a little more push. And you say, well, Gary, the weekly hadn't turned over yet. No, it hasn't. So it's possible the daily could turn over and slingshot higher and we continue this journey, sure. But I don't think it's finished yet, because the daily did turn over and hook and cross. And my 4-hour hasn't officially finished. Trend momentum made it, red and blue made it of the price action. The only AI you need to be thinking about is the price AI. That's the only AI you need. And right now, this likely still needs to push a bit lower to finish that cycle because of that daily hook and cross. So I would not be surprised to see the dollar kind of just bleed off further while this pushes lower in the coming hours. Fair enough? The question is, what happened once it gets there? Are we going to come down and test this breakout? So as far as the technical picture, we're more likely going to continue to break down and probably test this 100.5. Do we find support there to bounce and go higher? Possibly. If we don't hold that and we start closing below where we, that 105.50, 100.5 doesn't hold, and we start closing below that, then the highest probability we're going to go seeking the magic Fibbo line. That's this big orange line. And it's also from the recent low up to this high. We have our 618, 786 zone. So it's pretty incremental. The software is overbought. We need to depressurize. We reached our targets. We're likely depressurizing. And the typical place is to retest where you broke out from to potentially bounce. You don't hold that, then you typically do a magic Fibbo / 618 type of retracement. That doesn't hold, then it says we're going lower low than that guy. And what if we get down to this 97, 96 area and maybe we bounce another push lower, and this is a lower low? When we don't hold this support zone, then we're going lower low here, which puts us into our target zone we've been looking for quite some time. We go back a few weeks ago and we said, based on this, we're either going to pop up here or we're going to break down here. We needed to break resistance to say we'd go up here. We needed to break support to say we were going down here. And as you can see, we hit support, but we didn't break it. And then eventually we reached resistance up here, but then eventually we broke it, which stated we have a 75% chance we're going to visit 1448 at that 101.08, and a 70+% we're going to 101.50, basically 101.46, and that's exactly what we did. So I'm warning you, weekly's overbought, hadn't turned over just yet, but it is overbought. Daily's overbought, starting to turn down. That's why I expected this correction and retracement. The only question is it going to retrace to hold this breakout area, that 100.5? Bounce from there to go higher high, or is it going to break below that? If it does, then expect it to continue toward the magic Fibbo / 618 retracement, from that low to that high. We're looking for this green box. So if we don't hold this breakout zone, then we're going to go and test this 618786 zone. We don't hold that, we're going lower low to the extensions down here. If it continues, then we're going lower low down here, which is from the bigger move, that low, up to that high. That's the 618 here. We don't hold that, we're going lower low. So it's incremental. We don't hold the breakout, we go to the magic Fibbo 618 zone. We don't hold that, we go to the extension lower low. We don't hold that, then we go lower low off of the prior extensions, which puts us right in this neighborhood. Fair enough? So what's it going to be? Well, while I'm trading this, I'm in a position of authority. I said if you wanted to trade this move up, you could trade potentially UUP, the dollar index leveraged ETF, which you could trade. But now I'm expecting this to correct downward. So knowing this is likely to push lower, what's the way to trade that? Buy the euro dollar, buy the pound dollar. As the dollar's pulling back, the euro dollar will bounce higher, the pound dollar will bounce higher. Fair enough? So any questions on that? From the bigger perspective is the reason I'm still waiting for price to prove itself. You go back to the COVID low over here, up to that high, and we broke this all-important 618 zone. So this COVID low over here, right there, either one, because they're so close to each other, but I like the COVID low over here, and you go up to that high, and you can see we broke the 618 as we were stair-stepping lower. We broke that 618, which says we're likely going down as 86, 85. Actually, from that one's my 85 number I've been quoting for months. So we just use that. Typically, when you see a break of the 618, you got a 75% chance you go visit 85. We have a 70% chance we're going to go visit 82. That is still viable because price proved this at this juncture. It did not break the 786 yet to reconfirm it. But if we turn down, we start breaking, and we ultimately come to this target zone, guess who is below that? That would reconfirm the idea we really need to go down here. So this is looming until it's not. When is it not? You break above this pink box. That sets the tone that if that happens, these are off the table, forget about it, and we're breaking the pink box, then this sets the tone. We're going to some other higher highs en route to that 130, 140. Got it? And again, even once we get to that point, we know that if we don't go down here first and we break above this, this is off the table, but this should still take probably a year plus to go up to that 130, 140. Fair enough? So this is where the rubber meets the road. We get above it, these targets down here off the table. As long as we're below it, we still can rally to it, reject, and still go lower low. So be aware of that. That's why during these periods, well, are we going to do it? Or we're going to go lower? We're going to go higher? I take aggressive profits during those periods. And like I was saying, the euro dollar, it too is likely to go higher. We had a nice little push on the weekly. We're starting to see that bounce. You'll see the daily reversal starting to grind a bit higher. Be in a position of authority. While the dollar is likely going to go lower, this will probably grind higher. But we got a long way to prove this one. Still got to get above the magic Fibbo. We got to get above this resistance zone and start targeting some extensions. But the reason I even brought that up is you go back on that weekly chart, the same view we had on that dollar index, and you take this view right here, that recent high to low. Remember 4 years ago, almost 4 years ago, when we had this low down in here? I said, hey, might be a great idea for you to go long the euro dollar. We're going to get the dollar index to make that big multi-year correction, and we're going to get the euro to make a big multi-year correction to the upside. And we started targeting potentially up here in that 130, 140 area. And we said that if the dollar goes down to 80, then the euro is definitely going to go to that 140-ish area. And it's equivalent of that bigger move. So if the dollar can make a 618, 786 type of move, then the euro dollar is going to make the same type of move toward that 618, 786 zone, that 136, 147 area. So are we going to do it? Well, it's still on the cards until it's not. So from this recent high to low, which I was zooming in on to show you something, that from that high to the low during this reversal period, we said, consider going long, you'll make thousands of pips. Here it is years later, we're up thousands of pips. But we did break the 618, which stated we have a 75% chance we're going to 127.45. We have a 70% chance we're basically going to 130.99, 131. That's still viable until it's not. And when we broke the 618, that said that's where we're going. Then later over here, we broke the 786. That reconfirmed we're going higher. So I'm still taking this very seriously. That even though we did a 618 retracement, we did go breaking out. It looked like it was doom and gloom. Like, man, we just can't go any higher. That's the end of that bounce Gary was talking about. We can't go any higher. It's just struggling. Yep, it looks like it's breaking down. It did a beautiful 618 retracement to then go ripping higher. So is this over? This is still viable until it's not. When is it not viable? If we break below this green support area. We do that, then where is the euro going? No doubts. We're going to 0.8, 0.7. That's the zone we're headed to. So all roads, whether we pop and go up here first, we're going down here, or that is the end and we just start breaking down, we're going down here. All roads lead to this lower low. What is this equivalent to? The dollar ripping up to that 130, 140 target would equal the euro going to 0.8, 0.7 zone. Amen? So all of this is corrective against what? The bigger downtrend. So this is just simply a correction before we go lower low. Fair enough? But I'm not convinced that that correction is now over and we're definitely coming down here. The answer would be yes, we're definitely coming down here. But for now, as long as we're above this, we have a higher percent chance we got to go up here first. What happens if we get up there? What if, William Bruce, we actually get to that 127, 130, 131 area, or even higher? Salivate to go short for a long period, multiple year down to get to this target. This target is extremely high probability. Only question is, are we going to finish this thing to get up to those extensions? Then we start working on it. Well, this is why this green box is here. As long as we're above it, we still have a higher percent chance we got to go higher than ultimately breaking down to this low. Even though I'm 1,000% confident on 100% scale, this is ultimately where we're going. Right? Long-term direction. Do we go higher first? And the results of our strategy is we still have a 75% chance we still got to go higher than we're going down here. But again, all roads lead to down there. So we not only broke the 618 saying we're going up here, we broke the 786 reconfirming we're going up there. The pound dollar did the same, starting to show a little bit of a bounce as the dollar starting to turn over. This is starting to turn back up. Well, this one did it a little bit faster pace. We ripped. Same period of time, I said, you might consider going long the pound dollar. No buy, sell, to hold recommendations. I cannot tell you what to do. You need a financial planner, hire one. I'm simply telling you based on God-given talent and the ability to read and interpret price, along with the Market Price Anticipator software and the technical picture, this thing was due for a massive bounce. Thousands of pips. And that's exactly where we are. Early on, this thing ripped above that 618, stating we have a 75% chance we're going to 147, 70 plus, we're going to 152 area. Then we chopped around, tested the 786, pull way back, tested the support again, and then we went ripping, and then eventually we broke above what? 786. So not only did we confirm we're going up here, we reconfirmed it when we started closing above the 786 to say we're going up here. So this is extremely high probability target still looming. As long as we're above the green support box, this is still viable. When is this no longer viable? We break below the green box, we're going lower low, and the target on that is my 0.9, 0.8 zone. Lower low, 0.9, 0.8. So what's the probability we're going down here? I'm about 1,000% confident on a 100% scale. But you can't ignore the fact, well, we're going down there. Sure, if you want to trade with massive stop loss and short this thing, and even if it pops up to these targets, it's still more likely going down here. And if we're already correct and it starts breaking below there, then you can move that massive stop loss down into profit. And once we break below that, we're headed down here, and then we can just start moving it where lower, lower, lower. This will take years. Even once we break the support zone, I'm not looking for a couple of days, weeks, or months to get down here. We're talking stair stepping down here, probably over a few years. Amen. So that's the big picture. This is where we're going. Big picture dollar, we're going at 130, 140. But in the short term, are we going to reach these targets first? And they are still viable until we break the support zone. Fair enough? And that's the same thing with the euro. We're still viable till we hold the support zone. And where's that target? 127.45, 130, 131. And the pound, that same scenario, 147, 152 area. So what does that equal? That equals the dollar index going up here to its 130, 140 target. When we're up here, where do you think that euro is going to be? 0.8, 0.7. And if we get up here on the dollar, where is the pound dollar going to be? That 0.9, 0.8 area, right? That's where we're headed. The question is, do we need to go lower low first to get up there, or are we going to break out? As long as we're below this pink box, probability is higher, we go lower. Once we get above this, all bets are off the table, and we're likely going up here. Now, I've been talking about this 102 level forever. That's the short squeeze. Where did the short squeeze come from last year? Came off of this high here, and it was everything but the dollar. Short the dollar, short the dollar, short the dollar, short the dollar. Well, the short squeeze is starting to unravel. I was thinking it closed above 102, then the thing's going to go popping up here to 104, 105. We may not get the dramatic pop I was looking for because those shorts are starting to unravel as we just retrace toward 102. So I'm not saying we still won't go up here. Yeah, we break 102, still likely going to this 105, 107 zone, 104 and change, 107 area. What is that? The high to the low, that's the 618, 786 zone. But you may not get the dramatic rip I was initially looking for when all those short squeeze start getting stopped out. And what happens when you're short and you hit your stop loss? You have to buy it back to get out of that trade. That's what the short squeeze I was looking for. So I'm not trying to say it doesn't exist anymore. It is unraveling as we even got near the 102 level. Emil, how about that? Starting to unravel just when it gets somewhat close in the neighborhood. So yes, we could still rally up in here and still fail. Once we get above this, it's over, and we're going to 130, 140 over here, no question. So the only question is this thing going to fizzle and start breaking down? So in the technical picture, looking at the software, we said be careful, that I still think the dollar is going to grind lower still because the daily hadn't just started its cycle down, and my 4-hour hadn't quite finished the cycle. And typically when you reach your target extensions, you'll notice what I said here. Expect the dollar to retrace after reaching targets. That was last week's class. Expect that to, when it reaches the targets, to start to retrace. So what exactly did that do? It reached its targets, and now it's starting to retrace. Who could have guessed? Who could have thought? Who could have anticipated? That's where the software comes in. The Market Price Anticipator software anticipated we were going to get that pullback. Daily started to turn over, 4 hours cycling down, and we're not quite finished the cycle. Weekly's overbought, hadn't turned and hooked yet. But Emil, what happens if we start to get this push lower and we come around this 100.5, which is about 60 points, 0.6 points or so away, and we come and test this and it doesn't hold? Then we're going to come down here. What if during this period, as we grind lower, my weekly turns over and starts to hook and cross? Then that means we're going to have about 2 to 5 weeks for that daily to cycle down. And that would say, screaming, we're going to go down and test the magic Fibbo area, which is right at a 618 retracement off of this low up to that high. That's a 618 retracement. So this is a very important support zone. We don't hold the prior breakout level, we go to the support zone. We don't hold that, we go lower low. Pretty simple. What would that look like? That weekly pushing lower, the daily cycling down. I would expect, what if, William Bruce, we actually get the daily to cycle all the way down, right? And what are we talking about? The software. So you come over here to the daily, and what if this daily does, in fact, cycle down, cycle down? Where are we going to go? We're going to get sucked and pulled into the cloud area. For those of you like Ichimoku, I use it all. The software fits beautifully with everything. Is it the hook and cross Ichimoku cloud tied in with the software? It's beautiful. So if we're going to cycle, we're going to get sucked and pulled into this cloud area. Well, if you look at the ranges where that is, guess what that looks like on this Fibonacci chart? 99, 98. Can you make this stuff up? Look at that. 99, 98 zone. See it? 99, 98. Where is that? The cloud. Boom, boom. And what is that also from that low to that high? Fibonacci extension 618786 zone. Perfectly. So if we don't hold this breakout, we're going where? To the cloud on the Ichimoku chart. But on the charting platform, we're going to this magic Fibbo / 618786 zone. It's beautiful. It's gorgeous, right? So this is what I love about confluence of events. We get a week daily to cycle down, we're going down here. Down goes Frazier. Down goes Frazier. Right? So is this a guarantee? No, we could easily come back to where we broke out from, test this, and bounce and go higher. So it's going to be real interesting as this grinds lower. Do we ultimately, as we start getting near the zone, is that weekly starting to hook and cross? Because if the weekly starting to hook and cross by then, we're definitely, and meaning when the weekly hooks and cross, what happens? The daily cycles down. That's why if the daily cycles down, we're going to go test this zone. What happens if the daily then cycles down and then goes up and slingshots lower, and we get the weekly to start pushing down? We're definitely coming lower low, and we don't hold that. We're going lower low than this prior low over here. And that would mean on our bigger picture over here, guess what? This low is not done, and we need to move it lower. But I would, like I always say, I'd be remiss if I didn't tell you that either we end here, or somewhere in between. Wave 2 will end, and we're going to go breaking out to that 130, 140 target. In my humble opinion, that is a given. Question is, do we go lower low and keep grinding and then higher? Do we reach the target zone over here and then we go? Or do we just kind of retrace and continue? Once you break this pink box, it's over. The down targets over here would be off the table. We get above that, we're going to 130, 140. So this is the same picture on a bigger scale, just to show you from that low to this high, we're expecting a wave 2 retracement. I was not looking for a 38, 50% type of retracement. I wanted to see the 618, 786 type of retracement. Are we going to get it? Typically on these type of moves, you get a deeper retracement. That's why all roads still lead to lower lows until it doesn't. And when does it not leading to lower lows? When we break this guy, then it sets the tone. We're going 130, 140. Fair enough? So in closing, kind of sets the tone. We reach the extension. We're likely going to get a pullback at least to the breakout. We don't hold that. We're going to get that daily cycle down, pushing us toward the magic Fibbo retracement zone. We don't hold that and the weekly starts cycling down, then we're likely going lower low. Amen? All righty. What about, as we just went through the euro dollar pound out, euro yen pound yen? Talked about this last week. We made a nice push lower. We're bouncing back. Be careful. Be in a position of authority if you bought this bounce. How do we know it was going to bounce? Well, the software kind of set the tone it was going to bounce. Started to reverse on the cycle, but we're still stuck in that resistance zone. And this does not look complete of this correction. It still looks like it's chopping sideways. So I'm still more likely going down here before we go breaking out. So be careful, be in a position of authority. We're going right back to where we keep testing, fail, test, fail, test. And this next failure will probably push us toward our target. So I'm in a position of authority on these shorts. What happens if we get pipped out on that? I'm going to short it back down. Monthly's overbought, weekly's overbought, daily starting to turn over. And yes, most recently it's slingshotted back up, but it's still back in that same arena. Still saying we got more likely we're going lower low than this thing is to go breaking out. So be careful and take aggressive profits. Same things with the pound yen. It's trying its best. It's bouncing. We got a nice little push lower. You get pipped out. What happens if we close above this area where we're testing right here? What happens if we can close above that? Then we're going to start targeting at 217, 218. What happens when we get to 217, 218? Should that close above it? By all means, this is where we're likely going. 75% chance, 70+% chance if we close above this pink box. Not a poke above, but a close above. Then what? I'm going to look to sell it when it's up here for another push lower. This is still grinding and grinding in a topping type of motion. And sometimes it can still go slight higher high and then start to correct. And one more time, sure. Almost like an ending diagonal type of thing. And then you get the bigger move lower, but just be careful. When I trade these, I get to my position of authority, which means I'm in profit. And if it reverses on me, the worst thing that can happen, I can get stopped out for more profit. But it makes a trade into a winning trade and nothing else can happen. Same thing here. If we get pipped out, we close above this, then I'll scalp up here for a couple 100 points. Then what? Once we get a couple of 100 points, I'm going to look for my opportunity to short it back down. But this is not a given. We're going up here unless we close on a daily candle body above this. Then we're likely going at 217, 218. Let's move on. What about SPX and the markets? Be careful with this. We're kind of rallying toward the scenario, but still likely going to visit the daily magic Fibbo. This overlapping chopping action after this run up, this doesn't look complete. This looks like we need another push lower. So we've been talking about this for a week-ish plus, that this huge run up back in April, when we started talking about this, we were very bullish about once we make a new lower low, we needed this before we could possibly make all-time highs again. I expected this. Weekly push down, daily push down, and we got a big daily cycle up, weekly slingshot up, and this thing went shooting. I was expecting to take April, May, move in toward May, June to get up near the highs and maybe make some slight higher highs. This thing went ripping in April. Well, this kind of parabolic rip move, it was overdue for a correction. Is this little correction over? Doesn't look complete. The rally up here, failure, and another push lower. We're kind of stuck between resistance and support at the moment, but the prior run up dictates we need a bigger correction down. So I would be very careful. And I've been saying for the last few weeks, any rally should be sold. Any rally should be sold because we still need to clean this up. And that means we need a lower low than that guy right there. And my extensions are right in the neighborhood of the magic Fibbo. So please be careful with this rally that we're rallying in from the last high to low. We're rallying in toward a 618 type of retracement, but likely going to fail to go lower low. Looking at the futures market, bouncing right back in, kind of the same thing. Here's support, there's resistance. This initial move up, which was expected, anticipated, everything but predicted, because I don't predict anything. I leave that to the prophets. Everybody and their brother, including my gardener, predicts when my roses are going to bloom and when this is going to happen and the crepe myrtles and blah, blah, blah. Well, everybody predicts the weather, this, that, every Tom, Dick, and Harry. Well, I leave that to the prophets, but I anticipate with the best of them. So the software screamed this, the technical picture, once we got that lower low, said, now we can go to all-time highs. And this parabolic run, I warned you as we were going to extreme, we need a correction. We got the initial phase. We popped, and what it looks like on this ES chart, said, well, no, look, it made a new higher high here, but on the true contract price, it did not. You can see the June, which is now expired, it made a lower high. That spells we need to go lower low, right? That bounce lower high, even though we got a nice low bounce here, still at a lower high, we have a downtrending line, and this isn't a complete picture because this is now expired. So what do you do here? You go to the current contract, which is ESU. So we delete the M and go to the U, and that is the September contract. And we look at this, and the actual contract shows the same thing. Mr. Toussaint, we did not make a new high. Move that, get my arrow. We're at lower highs. So we have a lower high trend line. What about this rally? It's rallying right into that 618786 zone. But as long as we're below that trend line, lower low. What happens if that's the high, that's the low, that's the lower high? Look where your extensions are lining up, magic Fibbo. It's beautiful. So in my humble opinion, if you're taking that little bounce, I'd be taking profits. The likelihood this goes continue breaking out, anything is possible, but the likelihood it's going to go breaking out, unlikely. The likelihood it's going to fizzle manizzle and start heading lower is much higher because we had the big run up. We need a complete correction before this can continue. And that might be the beginning of a much bigger correction where we actually go lower low over here. So if this doesn't hold, we're likely going lower low than this low. So be careful. The weekly, the monthly, etc. Everybody's overbought up here looking for that push lower. See if I have that on one of these charts. The NASDAQ right here, bouncing today. My weekly, beginning to turn from overbought. Monthly is an overbought territory as well. Yes, it's still up. So part of this process is we expected this last little push here. Now we're looking for a correction. Do we get a much deeper correction or do we get that daily magic Fibbo correction and we turn over and slingshot again in the coming months? I don't think this is the end of the run and we're going, down goes Frazier and we're going into a market crash right now, but it is looming later, probably next year. But this daily is kind of turning over and engage, disengage, engage, disengage. And the likelihood this is going to finish that cycle is greater than this thing is going to go breaking out. And the daily is pushing. Like I said here, my 4 hours getting back toward overbought territory. So you tell me, what's likely going to happen? We're just going to keep ripping higher, or is the 4 hour going to turn back over and we start pushing back down again? So be careful. And when you look at where that's reaching, it's right into the resistance zone. So I'm going to go back to the actual contract, and I already have it in there. It's just right into the resistance zone. And the likelihood this goes breaking out, which is a much lower probability, but here's your targets to the upside. You got the high, you got the low. If we can clear the hurdle, we're going to go to 77, maybe 78. Here, 77, 77.50, 78. But that's a big if. We got to take that high out to get up there. And right now, we got to take this pink box up to go to the extension, which is near that 76, 77 level. What is that? That's this high to that low, 618786. So see, it kind of overlaps. That's 76 right there, and my 77. And this bigger move, it's 77, 78. So can we get up there? Yeah, we close above this, not a wick, but a candle body closes above that, then that's your target. So I'm going to go ahead and remove that one, just so it looks a little bit neater. And if we can close above it, we're going to go there. But the likelihood we fizzle and go lower is still much higher. Amen? So in the interim, we're stuck between support and resistance. So what do? You're down 6 points already where we just were a minute ago. Likely going to fizzle. So like I've been saying for the last few weeks, after this massive run up, any rally should be sold. Any rally should be sold. And we expect this to come down. We don't hold the daily in this magic fibbo. Then we go lower low. Remember the low? And who's sitting down here at the lower low? My weekly. So this is what we've been talking about for months now. From the Liberation Day low over here. I'm going to use my little control key. Let me move this up. Make sure I'm at the low. Liberation Day low. Locks it in at the low. Up to the high, you get this retracement. If we end up getting the fall in the fall and we're able to come visit the magic fibbo on a weekly chart, from that low to that high, see where that 618 is, right at the magic fibbo, that could potentially set up the end of the year rally, Santa Claus rally into first quarter, and we could see some stratospheric type of move into the stratosphere. So I do think we need a correction after this run up. But we theoretically, after that run up, correction, run up, we probably need a 618 retracement off of that low, right? This is way back here during Liberation Day low up to the current high. So if we don't hold this daily magic fibbo area, which is a support zone, we're going lower low, and lower low equals my weekly magic fibbo. That's part of the Market Price Anticipator software. So you must have that on a chart. You talk about a must-have. Oh, absolute must-have. So in closing, be careful with the bounce. I think we still need to go lower low to clean this position up. So back to the daily, you can see this a little bit easier. This is overlapping and chopping after a huge run up. Yes, it was pretty much anticipated. It was everything but predicted, right? We were going to go ripping. Didn't think quite to that length, but at least to retest the highs by June, July area. And this is what we're doing. We just went a little further. Now we need the correction. We don't hold the daily magic fibbo. We're likely going lower low. Got it? Which would be this 618. So we don't hold the daily magic fibbo. We don't hold the support zone. We're going lower low, which is my weekly magic fibbo. And I've been calling for this feeling that we're going to have a fall in the fall. That could be it. So I'm not guaranteeing we're definitely getting down here, but this price action is screaming any rally should be sold until we get lower low. And that lower low is sitting down here on that roughly that daily magic Fibbo, which is sitting about 7,000, 7,200/7,000 zone. Any questions? What about the NASDAQ? It too is in the same boat, looks identical. On the futures contract, looks like we did make a slight higher high, but the same thing happened. You go back to the original June contract. Lo and behold, Emil, we actually have a lower high. And this looks impulsive down. This still looks corrective, so we still need another push lower. Any rally should be sold, so be careful. Yes, it's up 500 points today. Woohoo! That's awesome. Well, that was the other day. That's the ended contract, so that's not the case. It's up 277 today, but that's the contract that's now expired. But I'm just pulling this up to show you that's expired, and we made a lower high. So we do the same thing. We take out the M, we put in the U for the current contract out to September. And yet again, we did not make a new high, even though the contract rollover, when you use this one, made it look like it made a slight higher high. Big difference. Just what I said last week when this thing started to rally, I said, sell the rally. Nice move. Now do it again. Sell the rally. We still got to go lower low. This is overlapping after that run up. This does not look complete. We really need a lower low yet again. What did that sound like that we talked about not too long ago? And this really doesn't show well on this futures chart, but I'm going to go back to the original one that has all the data. And that was this over here from last October when we pushed this lower and we could not make a new high. And we kept saying, even as it rallied here, still was a slight lower high. That guy right there was a lower high. And what did I say for weeks and weeks and even months during that period? Sell any rallies because we must go lower low to clean this up before we can then break to all-time highs again. We had the big run up, we had the initial move, and then we kind of chopped an overlap. We didn't make a new high. Sound familiar? Had the big run up. We had the correction. We did not. Remember, it looks like it on this chart, but it's theoretically not. We did not make a new higher high. Sound familiar? And now we're chopping and overlapping. What is the likelihood? We got to make another lower low to clean this up. Amen? All righty. What if it just takes off? Well, all we got to do is hear any type of inflationary pressure. Ooh, the Fed's going to have to raise rates. Well, right now, I guess when I did my update, it changed it, but let me show you what I look at. DGS2. That's the, did I draw that wrong? DGS2. That's the 2-year maturity rate. That's this line. We started peaking up. We're starting to pull back just a little bit. Here's our Fed rate down here. So let me go ahead and add that. So you come over here to the plus sign and your Fed fund rate right there. And then once you put that on your chart, you got to go over here and make this the regular. And then you can see what this looks like. This blue line down here, which I like it in a gold color. So I'm going to change this to my color right there, make it stand out. So this is the Fed rate currently between that 3.75 and 3.5. We're about 3.63, kind of in the middle. And when we were talking about the Fed decision rate last week or last month, no, the last few weeks, it's been a couple of weeks now. Anyway, we said that because this Fed 2-year maturity rate was so high above the current Fed rate, the likelihood they were going to cut rates was extremely low probability, right? And what did he do? He held the same. But because this is starting to run off, we get above this zone up here. we start breaking that 4.3, 4.5 zone, where we'd be like a point higher and pushing up, then that's where the Fed should raise rates. And who's very sensitive to interest rate hikes? Our NASDAQ, tech companies. So if this thing starts plummeting lower, then we get back below and start getting below the Fed rate and starts pushing lower below it, then he could cut rates. But this thing has been ripping higher, which is unlikely, is why I said he would not cut rates. And now if it continues, he's going to raise rates. Maybe we just need to poke a little bit higher up here and he'll raise rates at the next meeting. Any questions? Which is in July. So a few weeks away. If this thing starts ripping, then he'll probably raise rates. What I did say is, based on where the Fed rate was and where we were going into that previous decision, the likelihood he's going to cut rates is extremely unlikely. He could possibly raise rates. Yeah, if he raised rates, it'd be up here where this purple line is. We have room for that, but he didn't. So let's see if this thing starts pushing lower, he'll probably hold it again. If it starts pushing higher, he'll probably raise rates. We shall see, but this would dictate. And most people think, well, no, the Fed makes the decision. No, they don't. Not really. When the 2-year maturity rate crumbles, the Fed lowers rates due to financial crisis, whatever. Then when this baby goes ripping off, the Fed raises rates, cuts rates, raises rates, cut rates, raises rates. And what are these? 2007 financial crisis, dot-com bubble burst. And what's going to be the next reason? Whether we raise rates until we get up there, get that last push, maybe oil and the Strait of Hormuz gets shut back down and there is no agreement. And this baby goes ripping and oil rips to $200, $150 to $200, maybe even $250 on the chart. This would make inflation go out of control and we raise rates to counteract that. We could have it way up here and then maybe Elizabeth, I'm coming to join you. Or do we just kind of grind and then we still get Elizabeth, I'm coming to join you? Well, that'll be the next reason why we start cutting rates dramatically, is if we get some other financial crisis. It's happened every time, even in COVID. This was foreshadowed even before COVID, and then COVID hit much later, and then it still happened. So when this baby runs off, the Fed raises rates. When this baby drops, the Fed cuts rates. And right now, this level's way above the Fed rate, so how can he cut rates? He can't. This thing has to start dropping. Then he could cut rate. If this thing continues to rip, he's going to raise rates. Got it? All righty. I digress with that, but you get the point. So what's that got to do with NASDAQ, et cetera? I'd be careful on these. It's testing resistance. It's overlapping. It's chopping. We had the big move up, the initial correction. This does not look complete. It's possible that was the completion. We went up. But remember, this futures contract looks like it made a higher high, which it did not. So that still spells lower low. So any rally should be sold, be aggressively taking profits on these bounces, and be careful. We're running into resistance zone for us to likely fizzle manizzle and push lower. Fair enough? What about the Russell? Russell, baby. Russell's been on a tear, and we're expecting it to go towards that 3,100 level, which is only a handful of points away, but that's still the plan to get up there. Could that be the end of the Russell run and then we get a much bigger correction? Probably. Do we need to get up there first? It'd be a shame if we didn't. This thing has been in the makings for quite some time. From this recent high, let me get my 2.2. From that recent high down to this low, we've been looking for that 3,000 target. We finally got it. Next up is the 3,100 up here. So it'd be a shame if we didn't quite just finish this thing. Let's go up to that 3,100, right? Yeah, that's the ticket. Let's get to that 3,100 over here. So be careful. If we get to 3,100, I'd definitely take profits and look for a pullback, but maybe that was close enough. So you come back to the daily, and where did we top out at? We're getting awfully close with that last little spike the other day. We went up to a high of 30.62. See right there, 30.62 on that spike. So could we push a little higher and finish that 3,100? I've been calling for that target for some time now. We're on the bottom edge of that target, but that 3,100 is kind of about my sweet spot for that move. All I can say is what happens if we get to 3,100? Take your profits because I'm expecting a pullback. Amen? And then what? Maybe we get the same type of move on ES and NASDAQ that we do from the Liberation Day low over here. I have to pull it back that far. But that Liberation Day low rally, we get a 618 type of retracement off of that. And it lines up with the magic fib on a weekly. Then potentially we could get this thing to go stratospheric, like we were talking about with ES and NASDAQ. If we can get the fall in September, October, or whatever, over the next few months, we start giving that pullback, and then we stop at a 618 of this low up to that high, you get that 618 retracement right there, which lines up with that weekly magic fibbo, then the potential is to go up to the upper 3,000s, if not 4,000. Wow. Another 1,000 points. Love it. Amen. But be careful. We're probably going to push toward that 3,100. Then we're going to see a nice big pullback. Fair enough? All righty. So NASDAQ in the same picture. This rally, could it go breaking out to some new highs? Yeah. How do we look for target? We got to get above this resistance zone, which is still unlikely. But here's my target zone. And you use your 2.2. You go from the high down to this recent low. We get above that 618,786 zone, then we can start targeting 31,169, 31,392, maybe as high as that 32. But that's a big if. That parabolic run with this initial correction, plus again, don't look at it in this term, but that is a lower high. Looks like a higher high, but it's not. Come over here to QQQ, you can see it, lower high. Yep. So this rally, we still got to break above this resistance level, that lower high trend line. We break that, which would correspond to this zone right there. So even off of this number, you're looking at that same resistance line. We get above it, we're breaking that resistance zone, stating we're going to 31.2, 31.3, 4 area right there. Say 31.2, 31.4, likely targets, but that's a big if we get above this. So I don't care how you trade it, still got to get above this. We do that, then there's your target, higher high. And the likelihood we're going lower low is much greater. So do we pop to there or do we drop to here? The drop to there is much greater than the pop to there right now, especially with that price action. Amen. So any rally should be sold, and we're likely going to visit the magic fibbo on a daily chart. And even I love to look at the futures. Why? Because we have overnight price action. It trades basically 6 days a week, 24, 23 hours a day. It's closed on Saturday, opens on Sunday, closes on Friday. So it's just like Saturday's the only day off. And then it reopens on Sunday and you get overnight price action. So it fills in the chart much nicer than looking at the index, which gaps up, gaps down because the overnight price is shut down. And that's why I look at the futures to fill in those, what's it doing? what was this gap down? You can see price action lowering or raising when you gap down or gap up, etc. But even on the NQ, you can see what? Lower highs. This rally is likely to make another lower high, lower low. And as we do this, where we're likely going, daily magic Fibbo is the likelihood. We don't hold that, we're likely going lower low. And who's sitting on the lower low? My weekly magic Fibbo, which is sitting down here at a lower low. Amen? So is this going to be the fall in the fall? Maybe. But it really sets up, and I already have it on this chart, this much bigger view. The recent low, Liberation Day low, up to the high, we get that 618 type of retracement, which is right at the magic Fibbo. And we did a combo 618 / weekly magic Fibbo bounce combo meal. That's it. Up stratospheric move into the upper 30,000s / 40,000s. Got it? We could push to extremes up toward 45,000. Wow. Well, look at that move, Emil. We get down here to the low 20s on that fall in the fall, and then we go ripping and push us into the 40s. You're talking a double. Whoa. You're kidding me. We could actually double with this AI scenario? Sure. And then what happens once we do something like that? Down goes Frazier. It's going to be AI's got to pay that bill. See what's going on with the memory chips. They're going up so high, they're like a monopoly. But Japan has their, China has their entry into that, looking at making these DRAMs. All this going on, that starts happening, makes Micron start falling, all of ours, because they're no longer that monopoly. They have to be more cost effective and more cost conscious. And then we get a little interest rate hike, pushes tech down, be a lot of different things. Commercial real estate bubble bursts, AI bubble bursts, etc. Boom, we're going to get the ugly market crash. It's still looming out there, and the higher we go, the more likely it's coming. So I'm not trying to tell you we're going to have a market crash, doom and gloom. But Elizabeth, I'm coming to join you, honey, is looming. It's probably not until next year, because I do think even with this pullback, we're likely going stratospheric. But be careful in the short term, because this is probably going to fizzle and we need to go lower low. Lower low than what? This was the initial move. This is the correction. And this is the 1, 2, 3, 4, 5 type of scenario where we come down, look for a 618 type of retracement / daily magic Fibbo. Could we bounce from there to go higher high? Possibly. Or we can just break below that, head lower low. And that's where the weekly comes in to this Liberation Day low. And if we don't hold this support zone, we're going lower low. And who's lower low? Liberation Day low, 618 retracement. So this is why it's still the pit of my stomach. We're going to get a fall in the fall. I expected this run, not quite that long and that deep and that far, but I still expected it. Now we're looking for the correction. The correction is it going to hold on the daily magic Fibbo in the support zone, or if they don't hold there, we're coming down to the weekly. And this is what more in tune what I was thinking. Don't hold here, maybe a bounce, another lower high, lower low. As we move into the fall, we come down here. Then we set up a potential Santa Claus rally into next year, first quarter-ish, running in this thing to rip into the stratosphere. So in closing on NASDAQ, please be careful. Yes, we're up some nice points on a bounce, a nice little recovery, but remember, we're still at lower highs. We got to get above the lower high trend line to set the tone. We're going higher high. And the likelihood of that with all this chopping and overlapping looks like we still need to go lower low first to clean this overlapping, chopping, grinding, grunting, clean that up. And again, we don't hold that in the support zone. Then we go lower low into the fall, which sets up that weekly magic Fibbo. So the only one that's a little bit different is the IWM Russell. And again, this is likely pushing toward we reached the 300 target I talked about for a very long time. That IWM is headed to 300. Expect it. This is where we're going. And now we reached it. We got a little pullback. Could we go up here to that 305, 310 area? Yes. This would be the equivalent of pushing toward 3,100. Be right around that 305, 307 area. We get that push. That runs to 3,100. This will push toward that 305 area. Could that be the end and we get the bigger correction? Sure. Do we get the fall and potentially stratospheric moving into next year? But this run is beginning to weaken and top out. It's been a hell of a run. We reached the extensions, right? Looking at this, recent high down to the low. We reached the extensions. Could we continue to go up? Yeah, anything's possible. But the likelihood we're going to get a correction like we did the first time we rallied up to those targets, we did correct back toward the prior breakout and even a little bit lower toward the support zone. Then we bounced. Well, I do think there's more upside still, hint, hint, hint. But be careful because I'm looking for a bigger correction to happen after that. Fair enough? All righty. What about black gold, Texas tea, the Beverly Hillbillies? Everybody's talking about black gold. And I heard people, oil's bouncing. No, that's nothing. That's just kind of consolidating after the drop. Next drop's going to push us down into the low 60s, upper 50s. So for those of you that were trading the inverse, when oil prices drop, SCO goes a popping. We talked about this a while back when SCO was way down here. And this thing was likely going to go ripping when oil prices started dropping, drawing, and we could see, be careful. Yes, I think we could go a little bit higher as oil prices continue to drop, but be aggressively taking your profits on that bounce if you took advantage of it, because I do think this is going to normalize a little bit further. And where we're looking for, we talked about reaching the extensions. We're there. Now what? Likely going to push toward that lower trending high line that we had for a very long time. Retest that. That doesn't hold. We go lower low. But if rockets go flying, this thing could very easily come down here and rockets go flying and we go ripping to 150. Right? It's not out of the question. Just like we talked about here, Harold, we're due to go lower low, reach for the target down here, except if rockets go flying. Well, that's what happened. So, is this breaking down further? As long as we got a deal, we're going lower low. No deal, we're going higher high. What could put pressure on tech companies to go crumbling? This thing goes ripping up here, and then the Fed has to keep raising rates to curtail all that inflationary pressure. And like I was showing you on a bigger view, 250 is on this chart. It is scary, but that 250 is on the chart. From that low to that high to that higher low, 250 is on this chart, my friends. It's not out of the question. They even talk about if you go and do this war, oil prices are going to be 300 and higher. Well, don't get me started on the oil deal. U.S. gas prices should have never gone up. They should have kept going down. Why? Supply and demand. Our supply is so heavy. We have so much oil. Then you throw in the millions and millions of barrels coming out of Venezuela. We have the supply is greater than it's ever been. Put things into perspective. The U.S. is drilling at such a pace that we're producing more barrels of oil than Russia and Saudi Arabia times 2. And that number is starting to push toward ×3. More oil than we've ever had. So supply and demand says your supply is interrupted. You don't have supply. Demand is high. Prices go soaring, of course. Well, what's that got to do with us? We don't get any oil out of the Strait of Hormuz. So little, it's non-existent. So it didn't affect our supply, and our supply is heavier than it's ever been. That's why President Trump's telling the gas manufacturers out there, you need to lower your price down to $2.50 immediately, because supply and demand has nothing to do with your gouging. And he threatened a DOJ on him. We're going to check to make sure you're not price gouging. I think that's good. I think the United States should never saw gas prices spike because of this deal in Iran. It had nothing to do with it because our supply doesn't come from them. Our supply is heavier than it's ever been. Plus Venezuela's oil. It's just insane. I digress, but I think you get the picture. So, yes, Japan, China, those that get the bulk of their oil through the Strait of Hormuz, the supply was shut off, then prices should go higher there, but just not here. Got it? All righty. So where does that leave us? I still think we're going to go lower. We've been calling for it. We looked at this technical picture over here from that May 9th. I keep saying it. March 9th, March 10th. Got May on the brain. March 9th, March 10th, high and low. We started forming this wedge. And we said, based on the size of the mouth, we were either going to go breaking up or breaking down. We're clearly, with the deal in place and continuing, we're going down. And look where that mouth kind of meets, right around this line, right around that low 60s, mid 50 range. Okay. And if deal continues, then we go lower low. Be careful once prices get lower low, which could go in the 40s, even 30s. Wow. Oil per barrel could go into the 30s. It won't stay there. Why? Drill, baby, drill needs prices to be like 65 to make some profit. So we're not going to continue to have all these people drill, baby, drill at this pace, and oil prices sitting down here at 30, 40 bucks or even less. 30 range is going to struggle. They're losing money by drilling oil. So that's why, Harold, in the technical picture, we can get down here. You betcha. But it's not going to stay there. It's not going to stay there because it needs to get back in the 60s. So that 60 range is where prices have to be for drillers to make any money. So anytime it wanders off way above that scenario, it's going to come back to that zone. And anytime it goes way under that zone, it's going to drift back to that area. So I don't see us getting down to 30, 40, even dip into the 20s and sit here for 6 months, 12 months, 5 years, where we just sit here and it just sits there for many, many, many years. Not going to happen. This thing will go spiking back in the 60s and 70s. Okay? All righty. So we're likely going to continue lower. I think this little bounce the last couple of days, zooming that in, is just consolidation after that big drop. We kind of got a little bounce, consolidated, drop, consolidate, drop. So any rally still should be sold on crude, and I expect it to go lower low. Next target's in that low 60s, upper 50s, which is the backside of this trend line. Lower high trend line we've been running for quite some time. What about then? Yes, we could still go lower low. That doesn't hold. We go lower low, and that puts us in the 40s, maybe even the 30s. So here's the target, kind of a big target, I know, but that's where we're headed. As long as rockets don't go flying, and even with rockets flying, as long as the deal's in place, this thing should continue to go lower. Any questions? All righty then. What about gold? There's gold in them there heels. Be careful with gold. We did get a dip overnight to a lower low. Very surprisingly, we actually got a lower low there, Harold. Is that over? Could be. That might be the end of this correction, because what we were looking for is a lower low. And even as we got the lower low, I said, based on the price, we still need one more thrust. Is this over, or do we still need to go lower low? Last week I said, watch the bounce. We need to go lower low, but we got it again. So this may be the end, or we continue this little bounce and lower high, lower low. All I can say is this is nibble zone. If you haven't nibbled, you might want to nibble. Buy some gold, ETFs, straight up gold. Go to Costco and buy a gold bar. Buy and nibble. And what happens if it bounces and then like it did over here? Ooh, I was so smart to buy it on that dip. It made a new low. I bought it there and it rallied 300, almost 400 bucks. I was so smart to buy that. And the next thing you know, you're underwater. Don't worry about it. What did I say? You buy it, you nibble here, rallies, you go lower low into the sweet spot, right where we are, add some more. What happens? This rallies and we go lower low into the mid 30s, mid 3,000, not 30s, but mid 3,000. Then I add more. What if it bounces off of that and still makes another lower low? I doubt we're going to go any lower than this weekly. That's where my weekly magic Fibbo is sitting. All I can say is we get down here into 3,500 or lower, which right now this thing's at 34, 32 zone, that weekly magic Fibbo. We get anything dipping the toes in the 3,500 or lower, back it up. Because this thing is getting ready to go blasting off into the stratosphere of 7 to 10,000. Go back many years ago when gold prices hit 1,900, just under 2,000. I made a bold statement, not a prediction, because everybody else predicts. I make statements and anticipate with the best of them. But during that period, I said gold has to go to 1,000 before it goes to 3,000 and higher. We need that bigger correction down to 1,000 to settle the score, which it dipped into the thousands. They had very close to 1,000, not under, but 1,034 or whatever it was. Let's see what that low is. 46, 61, 52, up 1,040. And then what? It ripped to 3,000 and above. That was the plan. Well, this is the same type of thing I said here we're doing now on this parabolic run to the stratosphere. We're getting that correction now. I don't think we're ever going to see gold back to 2,000 around this monthly magic Fibbo, sitting at 2,100, 2,000 range. But all I can say is, what if, William Bruce, we can do it on a weekly and we get near that 34, 32 zone, any dip below 3,500 is get on your knees and look up to Lord Jesus and say, thank you, Lord. This is an unbelievable opportunity, because you're talking about a triple by the time this next run ends. We get into 3,000s, we're going to that 7 to 10, and we push the upper limit of that toward the 10. That's going to be a triple. I like it. So is this correction over? Maybe. Because today we did dip and made another new lower low. We really don't need any more lower low. So I'm not trying to tell you, you better buy every nickel you're going to buy right now, because you're never going to see any lower prices. That's why we started talking. We get below 4,000, we nibble. And if it rallies, arrow, and then we make another lower low and we hit the sweet spot, my 38 zone, 39, 38 was my zone. We hit that, then add to your position. What if I buy more there and then it rips and goes up? Then you're happy. What if it bounces again, another lower high, lower low, and we go even lower? Add to your position. It bounces and goes lower low, and we get down here to 3,500 lower, back it up. Because I don't think, even if we can get there, I don't think we're going any lower than that. Amen? It goes any lower than that, then I don't know what to do with myself. I'll be flipping cartwheels, because the lower we go, the further we got to get to that 7 to 10,000. So are we going to get to this weekly magic fibbo? Maybe. But this is certainly buy zone. And again, I can't tell you what to do. No buy, sell, to hold recommendations, because I'm not a certified financial planner. I don't even play one on TV. Not my thing. But this technical picture is screaming, like I did when we hit 1900, say we had to go to 1,000, then we'd go ripping the 3 to 5. And now we did that. And what's up? We're going to go dipping. Is that the dip we needed? Yes. Could we go more? Love it. Yes. But we don't have to. Then we go ripping the 7 to 10. So you're talking a massive run. What's the likelihood we get up here? Again, I'm about 1,000% confident on a 100% scale. I say that in a few of these examples, but boy, is this likely? You betcha. Could we go lower? If we are, get on your knees and thank the good Lord above, because that's a huge run coming to go from the mid 3s up to 7. That's a double. Pushing 10 would be a triple. I like it. Amen? All righty. So this is a buy zone. I can't tell you what to do, but in the technical picture of things, that is a buy zone. This possibly could be the end, and gold goes ripping off. Got a long way to prove it. Got to get above the magic fibbo. Got to take the high to the low, get above the 618, setting the tone for the new higher highs, going all-time highs, 55, 57, 6,000, etc. En route to stair stepping, which again, I don't expect this to take months to do it. I expect it to take a year plus. So when this thing does go ripping off to 7 to 10, it's going to take a while and stair step its way up there. Is this over? Not convinced 100%. I did say we needed a lower low. Even that one, I said we still need a lower low to finish this thing. As long as we were below 5,000, we'd make a low. We did it. Then as long as we were below 4,500, we'd make another low. We did it. So I'm watching this. As long as we're below the magic fibbo, we certainly could still go lower low. So what's the plan? Nibble, buy more, go lower low, buy more. We get anywhere near under 3,500, back it up. That's probably the lowest we will see if we get that low to then warrant the next big run. Silver, kind of said the same thing. Be careful with silver. Even after that massive sell-off and that bounce, we needed lower low. What I keep saying since this lower low. Look at the overlapping chopping price action, and it went to proportions of an ABC correction. And is this the lower low we needed? Maybe. We got what we needed. So not only once this parabolic run was running, what did I say to everyone? When you see these parabolic moves that just run like that, you need at least a 50% retracement. And we got like a 49%. And then I was like, well, based on this correction, that's proportionate for a 3-wave correction. We need more, another push lower. So is that the end when that happened? We got the lower low. And I said, be careful on this bounce for the same reason. That this chopping and overlapping still looks corrective. Corrective against what? The prior rip. So we still need further downside. Now that we've gotten it, it may be the end. Yes, I'd like to see it go lower. You betcha. The lower it goes, the more I salivate. But this is nibble country. We got the low. We can nibble on silver. Will it matter, Emil? You buy silver at 60. It goes down to 40. You buy more. Then when it gets to 150 to 200, it won't matter when you bought it at 60, even though you're underwater for a while. That's why I like dollar cost averaging. We dip into the 50s, I buy more. We dip into the 40s, and what are we looking at? Potentially and I'm not saying we're getting there, But like I said before, we get into the 40s, anything below 50 is back to truck up area. That is the weekly magic Fibbo zone. And if we can get there, which is, it's certainly possible that we could correct that far, this thing then is expected to go ripping to 150 to 200. What if we can get below 50? That's a triple, if not a quadruple, to get that 150 to 200. What's the likelihood we're going up here? I'm 1,000% confident on a 100% scale we're ultimately going to get there. Yes, I think it'll take a few years to get there, but do we go lower low? Nibble zone now, this could be the end. We don't need to go any lower. We don't have to. The technical picture based on that parabolic run and this correction, it met what we needed. It does not have to go any lower. But the lower it goes, the more I buy. And I don't flinch. Well, I bought some at 60 and it's sitting at 45. What do? Do I sell it for a loss? No. You buy more, dollar cost average, and lower your price from 60 down to 50. If you buy some at 60, some at 40, and it gets to the 40 range, then your dollar cost average would be in the low 50s. It doesn't matter. It's 60, 50, 40, whatever it is, it's going to double and triple to get up here, if not quadruple. The lower it goes, the more likely we're going to quadruple. Any questions? So be careful. This could be the end and we don't get any more downside. So certainly if you're going to think about buying this for this move up, you need to be nibbling right now. What does a nibble mean? I mean, if I'm going to spend X number of dollars, I don't want to spend 90% of those dollars right now. I want to spend a small percentage, 10, 15% of it maybe. And then it goes lower low. Maybe I spend another 15, 20, 30% more, up to 50% or so, 60% of what I'm going to spend. And it goes lower low. Then I load the last little bit up and I look for it to go to 150 to 200. What's the likelihood it's going up here? Like I said, 1,000% confident on a 100% scale. That's pretty damn confident. Could we go lower low? The lower low, beautiful. We don't have to, but the lower we go, the more I salivate to add to that position. What about Bitcoin? Bitcoin's breaking down. Where are we going? 50 to 30,000. Been calling for this since we topped out. This has been on this chart long before we were reaching the FOMO and going up to the target zone. This was kind of the zone we talked about, nibble zone, late 2026. Been on this chart for a long time, right, Harold? Talking about this forever. Likely where we're headed. So what do? It hits 50,000, we buy. Hits 40,000, we buy more. Hits 30,000, we get on our knees and thank the good Lord above and load it up. And we hold it till when? Next halving is in 2028, so we have plenty of time for this thing to start chopping and grinding. Last time we did this, we actually broke an all-time high because of the ETFs. I'm not saying we're definitely going to go back to the 100,000+ by April of 28, April-May zone of 28. It's possible. But either way, post-halving, we go on a 12 to 18-month run. And so what do? We buy low in fall of 26. When Bitcoin hits 50,000 and lower, we keep adding and adding and adding. And the lower it goes, the more we aggressively add. And we hold it from late 26 to late 29. Post-halving of 2029, so 12 to 18 months after the halving in 28, puts us in fall of 2029, and we should be at 200,000 and above, and we're buying at 50 and lower. That's a quadruple and more. I like it. And who's to say we don't stop at 2 and we don't go to 3 or even more? It could go really insane this next go around. So what do we know? Just high-level overview. For those of you that haven't seen this before, you go to a weekly chart, you kind of consolidate, don't worry about all these lines. But Bitcoin has a halving every 4 years. Back in 2012, 2016, 2020, 2022, 2024, 2028. So every 4 years we do this halving. And historically, you get a 12 to 18 month run, get a crypto winter low, starts grinding toward the next halving, 12 to 18 month run, crypto winter low, grinds toward the next halving, 12 to 18 month run. You get the rhythm. And every time we top out, it's been in a 4 year cycle. We topped out right there in 17, 13 over here, 17, 21, 25. So why am I so confident we're going to be buying low, selling high in 2029? That's the typical rhythm it rolls. 17, 21, 25, 29. And when did we bottom? 22, 18, 14 over here, 14 right over, actually right there, 14. So we buy low, sell high, rinse and repeat, rinse and repeat. So it is that cycle. When did we going to buy 26? When did we bottom last time? 22. When did we bottom before that? 18. Got the rhythm? So what did we say back in 2022 when Bitcoin was below 20,000? It's committing a crime to buy Bitcoin below 20,000. It's a steal of a deal. If you don't take advantage of Bitcoin, and this is when Bankroyd Freeman and all that went down, it's a scam, and it's just, how is that possible? It went from 70 plus thousand, it's down below 20. It's a scam. Get out of there. Well, I kind of said it like it was. This is going to go ripping. And I said 150 to 175. So please forgive me. We stopped at 126, but buying below 20 and it went above 120. That's a 6X, my friends. And you're disappointed with a 6X. I like your attitude, right? I'm disappointed. I only got a 6X. We're going to get at least the 4X this next go around. Could be a 5, could be a 6, could be a 10. Who knows? But it's the cycle it follows, like clockwork. So when Bitcoin hits 50,000, please buy a little bit. Can't tell you what to do. No buy, sell, to hold, but you get the point. That's the plan. And I buy some at 50, and next thing I know, I'm underwater because Bitcoin's pushing 40. Buy more. Dollar cost average. What happens if it hits 40 and it bounces and it actually goes lower than that? Back the truck up. It dips its toe anywhere into the 30s. $39,999.99. It hits that, back it up. Anything in the 30s is probably as low as we're going to get if we get that low. All I can say is I don't care if this thing dips to 25. I'm buying more. Buying at 50, 40, 30, 25, whatever. The lower it goes, the more I buy. And I'm buying a little bit of everything. Straight up Bitcoin and the brokers. A lot of different brokers you can use. Even our good friend Schwab Crypto is available for us to start buying down in here. And when Schwab Crypto is officially released and allows you, add some there, add some to crypto.com and Coinbase or Binance, wherever you are in the world. Just add some. And then the lower it goes, add some more. And the lower it goes, add some more. And if you don't want the ebb and flow, because it's going to rip and dip and rip and dip and rip, you can't handle the volatility, then don't look. Just buy low, wait till fall of 2029 and sell high when Bitcoin is going to be above 200,000, could be 300, 400, 500, who knows? But 200 is kind of the target, at least. And that is over, we get to 50, that's a 4X to 200. We get to 30, that's a 6X plus 7X. Get the point? So that's why I keep dollar cost averaging in this bubble. Anything lower than the bubble, it's unbelievable opportunity. So there's no such thing as Bitcoin's going to go to zero right now. It's too well established and it's taken over. It is the digital gold of the future, and it will continue. And this thing will reach $1 million. Yes, I said that correctly. I said it many years ago. Over here, it's going to reach 1 million. We got to the 100, a tenth of the way there. Next year, we'll get a 2 or 3. We'll be maybe 2/10, 3/10, 4/10, halfway there. Who knows? But it's going to reach $1 million one day. Mark my words. That's my humble opinion, of course, but that is what it is. And that's where we're headed. So rinse and repeat, my friends. Buy low, sell high. And if you're not into the ebb and flow, the day-to-day rips and dips and rips and all that, just close your eyes. Just do your big accumulation down here and look to sell when we get up to fall of 2029. Otherwise, as many times you can trade and make a lot of money, look for a dip, use that money to buy the dip and play the intraday, weekly, monthly type moves. But the big move is buy low, 2029, 3-year investment, sell high, just like we did in 2022 and before that. Okay? All righty, so let's circle the wagon. What do we got going? Be careful on the dollar index. Yes, it's bouncing. Yes, it looks pretty nice on that bounce. Yes, eventually we're going to 130, 140. That is the plan. Be careful on this. Still think we're probably going to bleed off a little bit more. Ideal place to bleed off would be the prior breakout around that 150. Bleed off down here. We don't hold that, and we ultimately get that weekly hook and across for a daily cycle down on the software. Then we're going to visit the magic Fibbo, which is roughly from the recent low up to the high, a 618 type of retracement, 786. So Emil, we don't hold this. We go down here. That's a daily cycle. The daily then turns up and slingshots lower, which the weekly is going to cycle down. Then I expect we're going to go lower low. Amen? All righty, so be careful. Any rally should be sold in the short term because we did reach the extensions we talked about. Now we're looking for this retracement. Ideal place would be to come back where we broke out from the bounce and go higher. That doesn't hold. We go down to the magic Fibbo /618 retracement of the bigger move. That doesn't hold. We go lower low. And that extrapolates with ES. Be careful. Yes, we could go breaking all-time highs. I won't say we can't, but until we break higher highs and that downtrend line, ignore this over here. Remember about the futures. Ignore that. So I'll just show it. Whoops, not that. I'll just show that to you on SPX. We have the lower high, which the futures contract actually shows, but we got to break above this lower trending high line. Lower high trend line, I should say. So we get above this pink box, not a little candle wick up here, but a candle body close. Then we can target 76, 76.40, maybe 77. And futures are a little bit different in price, as you can see, about a $50, $50-ish difference between the two. So ignore the fact that this looks like a higher high. Just draw this trend line. Trust me, just draw the trend line. And if we can break the trend line and close above this pink box, then we have a 77 target, followed by a 77.50, and maybe as high as 78 and change, almost 79. But more than likely, with this price action, this overlapping, this is likely going to end up making another lower high, lower low. So those rallies that we're seeing, I'd be definitely taking aggressive profits and be careful. If it breaks, by all means, continue to 77, 77.50. That continues, then 78-ish. But in my humble opinion, this would look better after that run up. This overlapping correction, we'd likely see another lower low. And what happens if we get the lower low and we don't hold, then it sets the tone. We might even go lower low than that guy. I'll be here to guide you day by day as we go through class, but be careful. I'll be taking aggressive profits on these, whether I'm shorting this thing or buying the dips, whatever. Be aggressively taking profits because while it's in the chop zone, more likely going lower low than breaking out right now, but it is what it is. We break the lower high trend line, then we start targeting 77, 77.50, 78 and change. Otherwise, we look for this to go lower low. Fair enough? So this rally the last couple of days can instantly turn into a huge sell-off because the technical picture really needs, again, that lower low. So until we break that trend line, all bets are off of this. Until we break it, then it's on. Otherwise, we still need to correct this lower low, like we did over here, and it ultimately did the same type of thing. Very familiar. Kind of chopped, and we did kind of go all-time high. Woohoo! And then what? All this chop and overlap after that correction. All that overlapping kept screaming, we need a lower low. This kind of looks similar, right? And even with this, we spiked slight higher highs. We still needed the same result before we then went really ripping. Same thing here. This looks almost like a duplicate of that. Stair stepping, still need a lower low. Got the trend line, we got a break. We break it, we know what we're shooting for. Otherwise, we're looking for this thing to sell off. And the same goes for the NASDAQ. It's testing the resistance zone. We clear it, then we could target 131, 160 area, 130, 31,003 area, maybe as high as 32. But again, same thing. We have the lower trending high line. We got to get above it. We got to close above, not a wick, but a candle body. Then we could shoot for the targets. But if I was trading this right now and I was up, I'd be aggressively taking profits and looking for this thing to go fizzle manizzle. So I still say the likelihood we go up here is lower probability than the likelihood we decline and go lower because of this chopping and overlapping. But hey, I have my lines in the sand. We break it, we go higher. We hold it, we go lower. And I'm still leaning more lower than higher. So with that, and continuing, let's look at one last thing. Mr. Tesla, can it break out? We still got to do the same kind of thing on Mr. Tesla. Is he going to break out? Lower trending high line. Can we break it? We have the most recent move. I'm watching this. You know, I'm long Tesla with several shares of TSLL. We're getting near that 618,786 zone. We break that. We got 460, 470, which sets the tone on the bigger move. Our 550, 600, maybe 650 up there. I'm still thinking Tesla's going to make it up there. Pay me now, pay me later. Do we get there? May take longer than we originally looked for. I was thinking certainly by year end we'd be up here, but let's see. Let's see if it does. Or do we get the fall in the fall and then we go ripping into early next year? Maybe we get up here then, a little bit behind schedule. All I can say is, Emil, what if we get the fall in the fall and it pulls all our big dogs down and we actually move slightly lower low? I'm just going to add to my position and shoot for the moon, Alice. I still think it's extremely high probability. And we hadn't looked at Meta in a bit. Meta still struggling at the lows. I still think it's still on the cards, even though we go lower low. I have some shares of METU I'm up on from the bounce, and I'm looking to hold. And what happens if it goes lower low? I'm going to add more and then look for the rip into next year, into first quarter, etc. So even if we come down a little bit lower, I'm still looking to add to my position because I do think this Meta can run to that 1,200, 1,300 target. Do we get the fall in the fall? All I can say is if it happens and we're down here, I'm adding to my position and looking for this thing to go ripping into the next year or so. So this isn't a very short-term trade. But if we get the dip in the fall and this thing starts ripping in the next year, I'm not trying to tell you, well, Harold, that happens. You're going to be up here at 1,300 by early next year, first quarter. No, but it's going to go ripping nonetheless. And it'll make us a lot of money on those shares, to say the least. And I'll probably take profits, look for correction, add to position, and then shoot for this later. But do we get the lower low in the fall? Maybe. What is this scenario? It fits across all the boards. Do we go lower low? We're holding right now. Do we go lower low? I'm just going to add and look for the bigger move, but it's on a run. This is part of the bigger correction. And then we go. Amen. As long as we hold here, we can go ripping sooner. We don't. We go lower low. Then I would expect this low right there to come into play. We go lower low right to there. Beautiful bounce, setting this up still. Fair enough? All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.